Peter McGuire, the CEO of AustraliaTrading.com, joining us. Hi, Peter. Good afternoon, and it's a pleasure to have you on the show.
Good afternoon, Ankita.
So, Peter, Brent is back up at $70 per barrel. Does that come as a surprise to you, given the fact that we had a bearish stance on oil and the oversupply concerns, the supply glut that we have been talking about after Venezuela?
Absolutely, Ankita. I think it's hit everyone by surprise, but we can't discount the fact as far as geopolitical tensions and that premium being built into price. You know, we're sitting now at 6.5-month highs, and the overall theme coming out from a Russia situation with Ukraine, and then the other side of it, of course, ongoing tensions with Iran and, of course, the US. So as this unpacks, naturally, price gets a hit up, and it was hit up very, very strongly. And it'll be very interesting to see whether this washes out over the next couple of days or it increases.
Right. Peter, does the Iranian situation really scare the daylights out of the market? Because a potential war would put flows at risk from a region that pumps about a third of the world's oil.
Absolutely. Well, the issue, there are a number of issues, but the other side of it, of course, to start with, Ankita, is when they look at shutting, and that would be Iran's capacity to shut the Strait of Hormuz or severely crimp it as far as passage, and how that would disrupt naturally oil supply and who's going to be the greatest. I think the casualty is certainly going to be Asia, and very much primarily would be China. So this is how it unpacks. Whether there is going to be, whether that materializes, that again is very much a work in progress. And you've got to look at the second and third consequences of that strategy, if that was to play out, and how would it move down the consumption chain to really impact many, many countries.
Right. In fact, Peter, that was my next question. If Strait of Hormuz was to shut down, and if there was anyone who was at the receiving end of this war, it is perhaps Asia and specifically China. So there will be a lot of pressure from China on Iran because they get affected the most.
Absolutely. And I think that China would be very much on Iran's doorstep to say, let's not look at, shutting down the Strait of Hormuz. And then you've got to look at what the US would be prepared to do. They could threaten it, and the Trump administration may just allow them to do that. So this is all going to be very much brinkmanship when it comes to strategy and how that plays out from a geopolitical lens. So the real loser, as I said, down the consumption chain could very much be Beijing.
Right. Now it's difficult to say, and you don't really have a crystal ball, but what would be your projections for oil prices? Because they have remained very elevated. Now, on one side, we had a bearish stance, a supply glut that is now getting outweighed by the fears of a supply disruption. Where do you see the demand and supply dynamics? How do you see that changing? And how do you see the prices moving ahead?
Well, I think first off, Ankita, you've got to look at from a strategy standpoint if geopolitics was to get elevated. And if that escalates, then you've got to add, $5 to $10 as far as war premium onto the price very quickly. And you've got to be considerate whether the US does have a military strike on Iran. The second part, of course, is the Russia-Ukraine situation. If that just keeps on its current ground, that's going to probably add a little bit further heat to the argument. So you would expect prices to edge up higher, but that's again dependent very much on what themes are played out, and that's no one knows that unless you're in the Trump administration or in Tehran to know what your actual war strategy is.
One final word before we let you go. Supply glut versus supply disruption. Where does the scale tip towards? Because that will perhaps decide the oil prices. $70 a barrel or sub 70, perhaps that's the deciding factor.
Well, I think the supply glut, because everyone's mindful of that. And if the war premium was to dissipate, then I think prices would be certainly much cheaper than what they are at the moment. Brent would probably be in an early 60s to high 50 handle. WTI probably mid 50s. So there's, I think, a lot would be stripped out. But that's a perfect world, Ankita, and you know as well as I do, things can escalate very, very quickly when it comes to the crude complex.
All right, we'll take your word for that. Thank you so much, Peter. On that note, we'll let you go. And thank you so much for joining us. It was a pleasure to have you, as always, on the show.
Thank
But
you.
with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.